Hey, everybody, welcome back to Markets and Sectors. My name is Mike Fairborn, Senior Manager Trading Derivatives at Charles Schwab. Great to be back with you. A lot to look at this week. We had a lot of changes and really some strong breakouts. Actually, as we break it down from markets to sectors to underlying industries and then finally into stocks, a lot moving within technology. So we'll want to take a look at that specifically. We'll want to break that down and see what strength might be behind there. Things to look at as well going forward. And by the way, there are some stocks in other sectors too that are showing strength. So we want to take a look at that, see what's up in terms of earnings and what companies have been beating their earnings forecasts as well. So plenty to dive into in today's discussion. And by the way, happy Friday. Yeah, I forgot that part. It's Friday, and welcome to you, Jay Richardson, BJ. We've got Michael. Great to have you here. Olga, Sharon. Hello to you, Sharon, as well as Will. Good to have you back. We got Brent Morse with us too. As I'm just working my way down here, good friend and colleague of mine. Follow Brent on X, Brent Morse CS. I am Mike Fairborn CS. Folks, welcome to you, Riceberg, and others in here. Kevin on down the line and wrong. Folks, let's dive into this. We got plenty to look at here. So, on to disclosures briefly. So, this material is intended for general informational and educational purposes only. Now, the paper money software application is provided for education purposes only as well. Investing involves risk, including loss of principal, and for some products and strategies, more than your initial investment. Futures options trading does involve substantial risk. It's not suitable for all investors. We just look at the charts here. And lastly here, just to state some additional information, just be mindful that the STAX is not a tradable index. STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. I wanted to hit that because I did want to take a look at the STAX and just see how some of the Schwab, across the board, Schwab clientele are, how they're investing relative to the market as well. Well, here is a look, though, as we take a look, as we dive into this here at the ES, so the S&P 500 index. Now, a quick note here. This is not like a guarantee, obviously, but when we do see volume kind of spike, like we're seeing right over here, and that was a pretty big move in terms of what's going on behind the scenes. Now, remember, this is volume on the E-mini contract for the S&P 500 futures. It does have volume. So we're looking at cumulative volume here, quite strong, really from that line base going up, right? This last move here was actually pretty powerful. There was a lot of moves in there. And by the way, there were a lot of volume, but a lot of big movers out there that we saw, mainly though through technology. A quick look at that as we dive into this. Well, here's the thing. Let's do this. Let's just look at the NDX. And as you see the NDX, so that strength continuing there, folks, we did take out the 30,000 level as it stands right now. Now, a little bit of what you might see sometimes is referred to as a shooting star. We don't know if that's going to unfold or not. What I'm going to say is that is a very, very strong trend to the upside. If we want to take a look at volume tied into, let's say, money flow, a cumulative read on that, and we're doing this for indications of a continuation of that trend going forward? Are we seeing strength behind it? And there you go. It was it was kind of a sharper dip right here over those 2 to 3 days pullback, but clearly a higher low here. Now, traders will utilize something like a money flow, right? Accumulation or distribution of shares because it adds, if you're closing higher on the day, it takes all the volume and adds it to that day. If it's down on the day, lower than the prior day, you take all that volume and then you simply just subtract it out from the prior day. So that's what's going on there. And you can see, you like to see this going like this when the market is going like this as well. What you don't like to see is something along the lines of, I'll put it in red, why not? You know, if we were to come up here and we just kind of go like this, even break down a little bit as prices are going higher, that's weakness. So you have to say, as it stands right there, that is a positive across the board. Now, there are ETFs you can look at as well that do have the volume for the NASDAQ. for the S&P 500 index. We don't do that here. We do it on the morning class. You have to be there live because we don't record those classes. But just to let you know, that is an option as well. This is one that Sharon gave me a while back, which is a significantly shorter symbol than the one I had before. Just put an E at the end for equal weighted so you can kind of see how that's been performing. Now, a quick note on this, because I'm going to compare the equal weights of the S&P 500 versus the NDX. Now, folks, let's just stop for a second. When you look at this on the NDX, the NASDAQ 100, one thing that screams out is tech. And so when you equal weight tech and tech itself is going higher, guess what? The NASDAQ equal weight is also going higher because it's based upon a tech. Now, that's not the case when we're looking at something like the S&P 500, right? If we take a look at this, many, many more industries and sectors within the S&P 500. Where is our sector? In fact, let's just click that in right now. A great way to do that, we'll throw in the sector real quick. But just to make this extra clear, what happened? Did I not hit enter? I swore I did. I've done that more than one. I did not. It is there. It's right behind description. It's right there. Do you see it? It wasn't there. You have to kind of pull it. But notice over here, a lot. I mean, there's just a lot of technology in here. It's just massive. And by the way, the healthcare, a lot of this is biotech. Still kind of fits into that tech category. But if you go into the S&P 500, wow, I'll be honest with you, you have 10 other sectors that make up a larger basket. So when we equal weight the S&P 500, what happens? By the way, EW at the end. Not a ton. So we just barely broke up into new highs now. And we did see some strength from the S&P 500 in terms of the RSI, but not a lot. My take is, and I said this in an earlier class today, I think it's tech that's even making this look somewhat decent. I really do. I mean, because you have so many other sectors that are just showing whoa, way weakness. Look over here with me. Here is our sector grid. Remember, for our kind of institutional indication, what does the sector grid show? It's not pretty. How many of these have been down? This is a 6 month. Now I'm using the right color to indicate down. Look at this. Even communication services to a degree, there, you've got a couple in there, like I think Amazon, Google, that are really kind of holding it up better than some of these others, but it has been even down for May. Look at technology. Now, when we stop, and I'm going to flip this on purpose, we're going to go into the equal weight to make this comparison. Look, what do you think is making this look even reasonably good? In other words, is this really a flag pattern that we're seeing? Question mark. I'll put it to you this way. If this trend continues and we have like 10, 9 at least, if we're not even counting this one, 9 out of 11 sectors that are showing weakness, you know what tech has to do to keep this trend up? Tech's got to be like this. Keep going. If these guys are going to continue to show weakness, it's got to really dip. Or conversely, these all have to reverse very dramatically when tech, and oftentimes that means that tech, oftentimes tech will come down. So I think this, you have to be very, very careful with it. It did just break out, but it's been kind of weak. I think tech is really where it's at. I mean, if you look at this, you don't need me to tell you that, folks. You just need that line right there. Now, I'm going to share this. I think most of you have it. I always put it in the description box as well. It is not a ThinkScript, but I'll just state, ThinkScripts aren't guaranteed for timeliness or accuracy, but it is just simply a grid. Now, it does have within the grid relative strength built into it, which is an indicator. Okay, I think you guys have this, but just in case, sector performance. And I got this a while back, this concept from Kevin Horner, who was utilizing this, but there you go. So that's it. If you don't have it, you can utilize it. So there you go. A quick note, what we always like to do here too, just step back and take a quick look at the 1 week sector grid. You're still going to see strength from technology. This is just, remember, the chart you're seeing here is simply 1 week. It is 1 week. So if you're seeing it going up, you can see the strength there. Up, okay? Everything else down except discretionary spiked on basically Wednesday and then still went down. So whether it be a 6 month or a 1 week, we're still showing just one key sector showing strength. So it might be interesting just to keep eyes on that as we break it down. But see how that's how helpful this is to kind of pinpoint us in potentially a better direction. Well, a direction where at least we've seen the trend at previously. Look how long that's taking. I just clicked on that. Wow. All right. Now, I do want to take a look at the Russell. The Russell being a small cap in nature, right? It's just basically uh Russell 2000. Now we did break above some highs here. My thinking is it's probably technology here as well. Okay, to the upside. There's a cool way for us to just figure out the data behind the scenes, which is exactly what I want to show you right now. Using the scan tab, we're going to find out what portion of the Russell is really in technology and seeing how it's doing kind of on a percentage basis over the past month or so. Okay, there's a cool way to do this because I was going to say if sometimes this can lead broad markets higher if in fact the small caps start to lead the way. I mean, larger cap, just in general, if the Russell starts to really move, it can be beneficial for the S&P 500 too. Watch this scan tab. Let's come over here into that scan tab. I'm going to highlight this right now. Not the S&P 500, but the Russell, so we can really kind of get to the core of what might be going on here. Out of the 2000, in fact, let's just make sure how many do we have here? We have 1717. We do not have 2000. So that is good to know. I'm going to mark it at 2000. And now we got, oh, it's kind of a lot. Forget it. I don't want to do it. We don't even need that. Just to highlight this, we'll just say 200. Fine. It's not the 2000, but based upon that, how many in the tech industry, as I go down to intersect with, are in technology? It's going to be very interesting to see. Only 186. So it's pretty broad based. Now, this could be interesting to kind of look at, sort of big picture and see what we've got, um, sort of in detail, and scroll through here on a 1 week, a 1 month basis. Remember, this can be changed. I'll share this indicator as well, but you can see how the performance has been outside of technology within this group too. So let's just come over here into the 1 week. Um, I'm just going to right click here. I'm going to edit the formula and I can move this instead of to 1 week. I can turn it into a 1 month right there if I wanted to and take a look at it. Okay. Let me just share it because this is the Think script, not guaranteed for time or accuracy. And I'll have this, here it is right here. So 1 week, but that is how you guys change it if you want to use that script right there. And again, I will have this in the description section for those seeing this on the recording. Okay, so let's see. Thrasher says, oh, let's see. Vought says, what would a 3 month grid look like? A 3 month grid. Well, I'd have to actually go through and change all of those, but it's doable. I'll change one of them just to kind of show you what it would look like. A 3 month grid over here would look, if we were using technology, we could simply just go to the right. Once you have the grid, just do this. Go over here, maximize it, and then just change each of them right there to the time frame of 3 months, and then you get a good sense of what that looks like. A little bit more visibility, you'd have to say. Yeah. So that it's emphasizing a little bit of the pullback and then also the follow through right there in technology. I've got the labels in here as well, something to look at, but clearly higher highs and higher lows, still reaching that 100 level. There was a pullback or a consolidation, but there you go. So it's just a little bit more visible all the way down to a 1 week time frame. How it was comparing to the yeah, the market there. And let's see, Mike, would you mind also sharing the market sector review grid? Absolutely. We're going to hit that and I will share it. Let me do just a couple things real quick first. Let's go back over into our general market. I wanted to show you also what had been moving with the price of oil. So as we look more broadly at some of the market sectors, oil coming down. Now, a big input to that uh, in terms of costs are going to be the transports. So $DJT. Okay, so moving outside of technology, maybe into some other areas. That is the Dow Jones Transport Average. I noted here, I mean, it's just a kind of a larger basket of companies, but I've got some to look at for you here. But look at that. Kind of bounced off this level, trend higher highs and higher lows. It is tied into energy. And we've been seeing is even if I break this down a little bit, Delta. This was one that we did a swing trade in our swing trade class on 100 shares. That's it. And it's already up quite substantially just from our initial break right there at 70, right? This was one that was breaking out of a range. And just a quick note on this one, higher highs and higher lows. This is when we were kind of creating this is what you refer to as a right angle triangle because the upper level is just simply staying flat where the lower range is making higher lows. And once you hit it, and oil dipped. There you go. Across the board, though, what do we have? So here's LUV, a little bit of a laggard, maybe willing to, or I'm sorry, on the potentially able to break above some highs, but Delta clearly the leader. AAL, more like a leader. What else do we have? So JBHT, this is a transport. This is one we also did a little bit of a swing on because we saw the price of oil going down and a bounce. We'll do that in that swing trade class pretty frequently. Here in this class, we just kind of review and show you what, we put some trades on too, but there you go. There's kind of a target range up there. Another one though, specifically like um, CSX. So this is like transports as in terms of like semi trucks, vehicles, large vehicles, JB Hunt, but then all ODFL as well, Old Dominion Freight Line. There you go. It's had a bounce, kind of coming up to some prior highs, but now we can get into another form of transport. So we did airlines, passenger airlines. So let's just do like carrier airlines, FedEx, breaking above some highs. Uh, Potentially could continue to run if that commodity continues to drop in oil, that CL, right? UPS, another one there, bit of a laggard there. So we've got airlines for human, passenger planes as well as transportation in terms of the planes. We've got, um, freight lines and then also rail lines too. So say something like CSX. This is one that we did a trade on. You can see the potential for a flag type pattern up here. It has not unfolded. In fact, it has gone sideways, but still falling into that area too. And you can see just big picture, higher highs and higher lows. This one, by the way, has a tendency, we talked about this, it just has a tendency to kind of go like this. It comes up and then flatten out for a while. I mean, this is kind of a longer consolidation, if that's kind of your point. That's kind of like a month time frame. This is kind of like a month pause. Look at this. Month pause, month, uh, perhaps more than a month, depending upon where you're looking at this at. So the rails might be a little bit uh, less. And then, of course, you have UNP as the final rail, Union Pacific. And that one actually is down today. But still, you can see an existing longer term trend. Will it hold support? That's an interesting question. But I wanted to highlight this too. Dollar sign DXY, the US dollar. So remember, this is a gauge, and let's go a little bit longer term here. Here's a weekly on it. Oh, there's our weekly, 15 weekly. We have been down. Now, all else equal, if the dollar is lower, it generally will inflate asset prices. Now, the S&P 500 is an asset, and so too are commodities. Commodities are even more sensitive to the dollar declining, but S&P 500, it being an asset class in and of itself, companies are assets. It can create sort of a drag or a pull on the market. So if we were to break higher, it might provide some weakness to the market, but in fact, it has been lower. Now, a couple of things, because this can be one of the leading indicators of the market. Historically, that has been at times the case, and oftentimes is. Notice this big number I've been watching here. I mean, we can watch here. Look at this. So right there, not so much there, but a little bit. We couldn't get through it here, here, and here. That is 100. It's an interesting level just to keep an eye on. Keep eyes on that. If we start to show weakness, like coming down here, that would be something to consider as well because that could inflate asset prices. Now, that's broadly speaking the markets. We're going to jump into the sector review and I'll share that here in just a second, but that's broadly speaking the markets. Technology kind of marches to the tune of its own drum, as we've talked about for the last couple of weeks, with the innovation and productivity cycle that we're seeing with AI right now, which is really kind of the driver for technology. Saw this during the early computer, retail computer outlays in 82, 1995, the beginning of when the internet was really coming out. And then 2022, which was AI, ChatGPT and others were just getting going. So that can run independently, but I'm just saying a broad-based rally, watch that 100. They can be helpful too, just to come over here and just to right click and just say, click on that, create an alert, sort of a custom alert, and just say above 100. Something like this. Make sure to also you've got your mobile device sent down below. If you're sending it mobile, which is what I do, you can send it through your email too. Click on that and then set it up top. Set up uh, application settings, and then under notifications, you can get that. Just a quick note, because I have to read that. My alerts, I haven't had any issues with alerts, but just to say there can be. Alerts are not guaranteed to be delivered or delivered at any specific speed or time frame and should not be used as a replacement for actively being aware of your position. So, like I said, I haven't had any issues, but it doesn't mean that they, just be aware, keep an eye on it. But yeah, this can be helpful too. Okay, let's do this. I'm going to go over here because I did want to highlight, um, let's see, where are you? You're over here. Well, let's see, where to go? There it is. Here is the stacks. We have not talked about the stacks for a while, but well, because we don't get the read all the time coming out. Now, this is the one that most just recently came out on the stacks uh, for this month, and as actually for April. Sorry, so end of April. Look what happened in terms of retail type investors. Now, this is a Schwab Trading Activity Index. This is fascinating. This is really, really fascinating. This is where we went basically the opposite. I'll zoom in even a little bit more. The opposite of the market. And again, what does the stack show? It was a back-to-back drop. It shows that. But remember, the market backed off when Schwab retail investors backed off. But when the market reversed higher, they still backed off. So retail environment. I'm just going to come down here at the bottom because there is good information on this down below, and I can share this too in the chat real quick with you guys. So you have it, but it is interesting. It does state it's a proprietary behavior-based index that is designed to indicate the sentiment of individual investors' portfolios by measuring what investors have actually been, this is a key point, actually been doing. What are their positions and how they were actually positioned in the markets. Folks, clearly they were getting out. They were getting out as prices were going up. And one interesting thing about that is that the May timeframe, you've heard of the sell in May and go away. They were getting out, but the market was going up. Again, a look at the S&P 500. What was driving it higher? You guys know. You guys know now because we just saw it and we shared it. It was technology pretty much across the board. But that's an interesting divergence from the market. But technology really pushed it up. You'd have to say this too. If a number of those other sectors dipped, which they did relative to the market, not every stock within there dipped, but you'd have to say that as the stacks went lower here, and let's say they were maybe broadly more based in, their investing approach, they were more broadly based, not so much condensed in technology, that might have been a positive for them. Because what did we see over this time frame? We saw other groups in the S&P 500 dip. So just kind of breaking it down to another level there, right? They might some of them could have done pretty well just by getting out because other groups were dropping. All right, well let's dive in. actually super quick, market posture. How are we doing long term? We haven't looked at this in a while because we haven't had to. We're clearly above these longer term trend lines that are oftentimes used. 50, 100, 200 is what you're seeing there. Okay. Weekly basis, clearly above these levels as well. Now, what are we seeing over here on the market forecast? The market forecast, remember what this is? If you are above 80, doesn't matter the direction of the line. And we are solely just looking. This is very important because there's three lines in the market forecast. We've taken out the other two. This is just simply the intermediate. I can't spell all that out. Too much writing. INT for short. This helps us get an understanding of the longer term perspective of the market. Okay, the market forecast line. If you are above 80 and we cross that level, and as a matter of fact, as soon as you're above 20 right here and the line's going higher, this gives a positive indication. The market, this is how some traders use it. The market is giving you an indication that it's okay to put on bullish trades. That's how some traders will use the intermediate term line of the market forecast. The market is saying it's okay to put on trades using that the way some traders do. But go back and take a look at it. It's oftentimes very, very interesting. Again, anytime it's above 80, holding above 80, it doesn't matter the direction of the line. If you're below 20, you don't ever touch it. You don't ever take a long position in the market. But if you break north of 80 and that line is going up, you can start to take positions. So it gets above 80, direction of the line doesn't matter. It's just showing strength. So we try to keep eyes on this as well, just in case it does one of these. Because it can be an interesting indication. Case in point, what did it do over here? Let's go back to a longer term time, 2 year, even better. Look over here with me. Look at you holding above 8. Okay, breaking above 80 right here. A little bit of a dip there, but once you started to trend up here, pretty positive. Right here it said, a little risky. Things were getting a little shaky, but you held some clearer signals here. Big down day, and again, big down. Okay. Over here, you held up above 80 for a period of time, but when you started to break, that's your initial sign. A quick note on the market forecast, everybody. If you break lower here, say for example, you break lower, which is what you did, you broke below 80 here, watch this move coming up. If this is a lower high and you start to break back down there, you might see a dip. And that was a decent dip in the market. Now, that would have been extremely helpful over here. You're above this level, you're really flattening out. We were watching this at the time, but when you broke lower and did not make a new high, started to break again, that right there is a very, very, I'm pointing to it where it's at on the chart, is a very interesting and early, and I should say, and early indication of a potential pullback. So keep that in mind. I just added it over here in case you haven't seen it before. So just add it like any other indicator. Go up top, go in Market F for forecast, double click on it. When you go into it though, I've taken out the near term, and the momentum is very erratic. It's all over the place. Near term and momentum though, and just kept on the intermediate term line to view the markets. Okay. So that's been used before. Now we're going to get into our market and sector review. I'm going to share this so you guys have it. You guys could take a look at it each week too. I'm going to share it. Again, no guarantee. Think scripts aren't guaranteed for timeliness or accuracy. There are some, like the Hindenburg Omen is one that has an indicator that has been developed. All right, so I'll put this in here. I'll just put market sector review. Okay, let's look at this. Diving into that. Folks, if you're getting any value from this presentation, do me a favor, just smash that like button. Lets me know. And, this kind of content is useful for you as well. Consider following us on Trader Talks. Love to have you on board. If you're not already there, love to have you there. So just a quick note on that. I'll point it out here. Up top, I think many of you are. We just crossed the 198,000 number in terms of clients here. So here we are, 198. Brent's got some great classes in here under the playlist. Just click on playlist. Of course, everything is free. Just subscribe. And there he is, Butterflies 101. Zero DTE example trades. So some really interesting things to keep an eye on in here, just generally speaking. And there you go. Managing an options portfolio. Now that I just thought about it, I'm talking about options here. I better just quickly read an options disclosure, just as a quick note. Equity and index options carry a high level of risk and is not suitable for all investors. Just had to state that because we, brought up options and had to note that. Okay, you guys have this now. So let's kind of break it down. Samuel McClellan said that the McClellan oscillator, not Tom McClellan, which supposedly is his son, but he said, hey, if you get below the minus 100 and then back up above the minus 70, go ahead and give yourself 2 to 3 weeks of a rally. How much of this time frame have we seen? Let's just be very deliberate about that. When we got above, I'm going to zoom in too. When we got above the minus 70, which is right there, we on this day, oh, okay, I'll just use it here. We're good. That line extends all the way down, which is just brilliant. Okay, so we go over here. That right there is 11 days. We're looking at 14 for, there you go, 10 days, 2 weeks. So what does that suggest? Well, there could be some additional strength, 2 to 3 weeks. Let's go out and hit it out here, right about, let's see. Yeah, I mean, you're getting into that range right in here. So, there might be some additional movement over there, but we did get the bounce. And we've been seeing a lot of that with the McClellan breaking back up above the minus 70. Now, this ran longer. It can run longer, of course. Anything can happen in the markets for sure. But that's what the McClellan oscillator shows. And it's a market gauge based upon the NYSE. Again, that's looking at basically you're using a couple of moving averages, the 19 and 39, and it's looking at it's using the advancers and decliners with those two moving averages on a larger basket of stocks, more breadth there, about 2.7 thousand, yeah, 2,700 stocks roughly. So it's a breadth indicator. So far, that's been positive. You're not looking at the NYSE here, you're looking at the ES. Just as a highlight, I've caught myself doing that, saying, "Oh, look at the NYSE." I'll show you that in just a second. Now, the McClellan Index, Summation Index, sums up this movement, and generally, the way to look at it is, are we making higher highs and higher lows? Now, we did make potentially a higher low here, but the smoothing out is interesting. The general direction does help, and that's what we're looking for there. It's kind of neutral right now, to be honest with you, but not really moving up very quickly. A quick note in terms of advancers and decliners and just visualizing that on the NYSE, whereas the McClellan uses a couple of different moving averages on the advanced decline line. How are we doing over here? We flattened out. We flattened out right there, basically around this point here. I just draw a line coming down to it. So we had basically been not getting a number of advancers coming in. This is not a breadth move in the market. This is a technology move. We saw it clearly in the dot-com era too. Okay, let's continue on. We've already looked at the SPXEW, slower, lagging behind the scenes. Tech, probably responsible for keeping it up. Now, we did see a couple of spikes over here, which is interesting because we did see the omen indicating 52-week new lows. Now, with that in mind, we're on a weekly chart here too, by the way. A split of 50, a great number of 52-week new highs and lows. Oftentimes the trend can be helpful here. That's a real indication of market breadth. Weakness, a fair number of lows, and clearly a number of highs. Okay? It's fascinating because we're looking at the SPX here, not the NYSE. But there is a breakdown. Now, could this change over here? Yes, it could. It could, but right now we're just seeing a lot of strength in tech. So, a couple more. Let's go into it. Yeah, just not nearly the amount of NYSE new highs. And that is the NYSE. You'll notice also with the NYSE, it too has not made a high. Now, the Russell's made a new high. The Dow has. The NASDAQ, the ES has, but not that larger basket of stocks, which is the NYA. That is our line. Okay. So they have not been participating. This looks interesting in terms of seasonality. We're up just over, over 10.5%, over 10.5%. Look down here with me. An equivalent level is closer to 3.5%. You see that at this level? So there's quite a big gap in here. The only thing I would say is if there's an AI bubble and those bubbles can continue, that's what's accounting for that difference right now. Over January through December, the last 10 years, we generally tend to run, and we are running. So we can still see this. When do the markets tend to consolidate? Well, towards the end of July. A little bit of a blip up in August, consolidation September, sideways before you get the year end, also referred to as like the Santa Claus or year end rally. Okay, there's a good look at our 30-minute chart on the S&P 500 index. And there is our indicator that Sharon had given us a while back. Wait, that's the really long one. I'm going to change this right now and update it. You guys, you're going to want to update this. It's all we need to do. We don't need this long Fred indicator. It's just NDXE. Click OK. And it did that again. NDXE space. Oh, click on that one. Click OK. Now we've got it. And I'm just going to resave this right now. That's how you get the equal weights with it. Save grid as, boom, we're done. Okay. All right, and let's look at the volume profile here too. Let's see, volume coming down, 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 down. If, right now, it's difficult to see any volume. This is where things would be kind of like where you'd find support. Just taking this volume off the bottom and saying, where does this volume come in at what price? And by the way, folks, this is just simply an indicator to look at. It's always an indicator. When you do not have volume here, when you are hitting new highs in the market, it can be blue sky. It can run faster. Keep that in mind. Maybe one of the reasons why these bubbles but break new highs have a tendency to just keep running and run. I mean, we don't have like sellers that naturally come in at certain levels like you might see with the volume profile here. Okay. All right. Well, we got through the markets. I did want to drill down into technology specifically and look at some specific type stocks out there too, just to keep an eye on. Now, yesterday we did use, and I'll show you guys the link for this if you do want it, but I found this to be interesting, an interesting scan that can be used. And it's just simply, let's see what we've got on it today. But it is the super trend, which looks at an ATR breakout. And it's just chock full of technology type stocks that generally come in here. Now, these are all new as of today. If you take a look at yesterday's class, you've got them from yesterday as well. But look what we're getting here within, well, this is in the S&P 500 that are really kind of showing some strength. I want to look at a few of these that might be showing strength off the bottom as well. Some of those stocks, though, that we'd seen were showing, oh, come on, it's so slow. Like ORCL coming up out of a base. So we saw this here. I'll put on the super trend here so you guys can see it. This was built by a guy by the name of Mobius a couple of years ago, but it gives you a buffer zone based upon the volatility, a stock's own volatility in terms of a breakout. You can see it will flip green when prices are going up, and oftentimes will flip red when it's going down or when there's low indications of a follow through. We got it pulled up right here with that scan yesterday, but look at some of the technology companies in here. See that? I mean, that was a pretty sharp move over here. Maybe, and I've shown this again, but you've got a bit of a rounded bottom over here. See that? A cup and handle. You take the highest range between the high and the low. If you're actually getting the longer term price projection, you take that range. from the breakout of that level to the upside, and that is like I'm just eyeballing it here, folks. My lines are all over the place. They're not straight, but you can see just generally from the high to the low on that breakout where the, let's just put it this way, the higher target would be. There are also flag patterns in here like this, like a potential flag pattern. I think we're very close to that flag pattern. If we are using something like an Elliott wave, that's a bit different. Elliott wave, especially if you're looking at like an extended three-wave pattern, what you'd be doing here is you'd be looking at the initial price move as a wave one here. Okay, now that wave one is measured at the end of the two wave. The two wave can have like an ABC in it. We could do a whole discussion on Elliott wave, but a lot of traders would say that's an A, B, potential C over here. If you're looking for a wave three, these can be anywhere between a 1-to-1. Notice you're measuring it off a higher level, a higher low, a 1 to a 2%, a 200% move, that is. I should say a two times. A 100% times or a 200% times move. So these can be big if that is an Elliott wave, in that sense that people are looking at and measuring. So there are a few ways to look at certain price targets out here. That is one. Some of the other ones that we did see out here. In fact, we can just pull up like let's see, when did Dell? Now Dell really did move, but look how long Dell has really been. That one's just crazy. That's not even a good example because it just jumped up too much. My goodness, that's like 30% where it's at from yesterday's close. Not a great example here. What do we have over here? Oh, yeah, that was one that showed up, but it will pull up those as well. But what do we else do we have? Not a ton here under on today. Let's see, INTU, what's BEV? BEV. Okay, sometimes you might see these off of the bottom as well, like right there. It just has to be a big enough move to offset that upper ATR rail, as it's called, right there. If you guys are interested in that, though, I can pull this out and just show you. It's just under here. I'll just share the link if you want to take a look. But I have both of those scripts there. They're under the description section, so you can pull it up. We weren't able to build the scan for the longest time. I couldn't figure it out. I obviously kept getting errors. Finally, we're able to get it filled out, but this could help maybe as you're pulling up some. There are some adjustments I'm going to make to this in the future. So we've got kind of a look back period as well. Let me just throw this into the chat though here for you. Here is the super trends at the top, but there you go. With that, let's see. Be sure and check out Brent's classes as well. We've got some great stuff in there. But yeah, in terms of other, stocks that have been kind of flagging a little bit, here is a Google. It's actually still in red right now in terms of the super trend marking. You can see it did an okay job in terms of picking up the bottom here. This next leg hasn't flipped yet, but if you look at Google itself, look at this move. Pretty strong, holding sideways. A lot of interesting technology stocks. What about Nvidia? Is it bouncing yet? Yes, it's bouncing, but notice we haven't quite cleared that upper rail yet. It does a pretty good job, but it can't be kind of a smaller bounce. It's got to be a strong enough move so that it can offset that volatility, okay, that we've seen, that ATR is tracking here for us. Okay, it's got a couple of these, but we're just not there yet. So interesting to see if we'll get something like that. But what else do we have? I noticed that Amazon had been kind of in a sideways range. Okay, it did just barely get a signal here. We'll see if it can continue to move on up higher. There are just a lot of companies out there. Somebody in the semiconductor group too. I see that one's still in the green. How about AMD? These have just been so strong. It's still holding. Yeah, so still showing buying strength here as well. Folks, anytime you want to break that down really super quick, go into the scan tab. Uh, you can take out that scan and then just S&P 500. Once you're here in the stock hacker, to the right, go on where it says intersect with, just pull up all the information technology stocks and you can check them out. There's 73 out of the 500. This is what's really been powering the S&P 500 higher. Folks, again, smash that like button if you enjoyed today's presentation. It's been good being with you. Thank you so much, Brent, for all your help. And everybody, have a fantastic weekend. It was great seeing you all here today. And here we are. We are ready for this is the last class of the week. So take advantage of it. See what's out there in the markets. And everybody, look forward to future discussions with you. Take care. Have a great weekend.